I'm just going to quickly go back to a slide that Charlie put up. So what we do from looking at our available markets, and stand back a bit so you can see the slides. In terms of total available markets, Charlie said we look at different verticals in a different way. So we're looking at whether it's cancerous, so whether that's then esophageal, stomach, and colorectal, or then it's ablation using lung and the pancreas, liver, kidney, or we look at the disorders that we have. We've looked and analysed what the size of the markets are in total, what the size of the markets are that we can go after, and we've looked at it when you have the full suite of products available to us. So the full suite of products will be available to us by the end of roughly 2026 into 2027. So the sales teams you see in the room today and the rest of the sales teams we've got around the world will have all these at their disposal to sell. Over the last 12, 18 months, they've had more and more products available to sell into the market. So what you then look at and see is that when you break down each of the GI resection for cancer and ablation for cancer and the GI disorders opportunities, you're looking at very big total available markets. Yeah, lung cancer is a huge market. But if you're looking at the market that we can go after, the way we looked to quantify it, you're talking of, sort of roughly $1.5 billion market right now, growing over the next 10, 15 years to somewhere near sort of a 4-ish billion market by the time we get to 2050. Not sure any of us are still going to be around in 2050, but what we're going after, if I can, what we're going after right now is that 1.5 billion or roughly billion market that we can target with the products we got at our disposal when we've got the full suite. So right now we need to build the sales teams, build the sales channels, and build the clinical evidence to go after this. For those of you that have been with us and seen the journey from a long, long time ago, Kevin's mentioned already at the start of his speech that we've hit our targets since the middle of 2024 onwards. We've seen a growing evidence of a growing trajectory in sales quarter on quarter when you take the line through it. We expect to see this continuing to grow. We've grown year over year. We've grown roughly this year, we'll grow 40 to 60%. See, Duncan said that. We've got to grow at roughly 40 to 60% this year from a revenue perspective. We expect that to continue to grow. We're not going after a 1.5 billion revenue line in the next few years. We're going after a very, very, very small fraction of that number. So execution from the sales team, execution internally, execution on having the products available is absolutely critical to what we're trying to do. But at the same time as growing the revenue, we have been taking our costs down, quarter over quarter, year over year. The reason that this can happen at the same time as growing this is we've invested in our sales team 12, 18 months ago. We have the sales teams in place. But also what you see at the back of the room, we've done the hard yards. We've got the evidence. We've done the R&D that we need to have done to the products. We've got the regulatory clearance. Charlie's just said when you look at the extra products that are coming online, I know I'm switching around a bit, but you look at the extra products coming online, these are outsourced. We're not incurring additional internal cost to produce these products. So one of the challenges that we've had for a number of years is a cost base that was relatively high versus what our revenue lines were. What we've done over the last year and a half, 2 years, is take that cost out. Will that cost come down slightly further? Possibly. But what we're not going to be doing is adding a huge amount of cost into this line to facilitate this growth. We do use distributor networks in Latin America, in APAC, now in Europe through Creo Medical Europe, and that's to develop the markets that these guys have already talked about and the potential size of the markets that are going to come in those areas. This gives a little bit more granularity as to the size of the markets in each one and how they're going to grow. So there's a significant growth from 2025 all the way up. You can cut and slice and dice this number all you want. You can look at cancer incidence rates. You can look at what we expect, the volume of in terms of screening, et cetera, it'll come in, and every single metric will tell you that you're going to see more and more cases that will need to be attacked and need to be treated. The focus from us, though, over the next few years is we are going to grow. We will grow our users. We're going to grow users. The fact we're going to grow our revenue. But what we need to grow is utilization per user. When we first set out the model back in 2016, we said that if one user uses a product twice a week, it's a $100,000 account. That's all well and good. They're $1,000 a pop, but the lung device is not. The lung device is over £5,000 per device. So you don't need as many people to generate 100,000. Or, if you think of it another way, 100 cases a year is 500,000 if you're talking about a lung product. If you're talking about a spider blade, it's close to 200,000. So the more you can drive growth of utilization per customer, the better you are and the more revenue you're going to grow. We've got roughly 250 users right now. Yes, this says we're going to grow to over 800 users in an unspecified time frame. I'm not allowed to put a forecast on. But the key is driving utilization per user. If we can get every user of the 250 to use it twice a week, it's a massive difference to us as a company. So you will see the revenue from Creo keeping on growing. You will see it growing in the next few years at roughly 50% growth year over year. We expect to, at some point, be shooting the lights out of that number. And you will see the revenue grow to beyond 20 million, 30 million, 40 million. But what you've got as a cost base right now is roughly high teens millions of revenue is a break-even position. We're not far off. It's a few years away. But the potential that we've got in the lung products, in the pancreatic product, in the colorectal product, in the POEMS product, and all the other products we've got go way beyond that 20 million.